morning, ladies and gentlemen. This is Butch Shorak, Options University. Monday, October 15th, 2012. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We are not a service that tells you what to trade. We're not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. And with that, let's take a look at this past week and see exactly what happened to us during this week. Key things that took place on the economic front, jobless claims. They looked a lot better than what they actually were, as a big state, mainly California, failed to turn in its numbers on unemployment. So we really didn't get a decent number as to what unemployment was this past week. As that news broke, the market did pull back, and we saw that for the week the S&P lost ground as the correction for the week continued. On Friday, the PPI, the consumer sentiment, and the consumer sentiment from the University of Michigan registered reading of 83.1. This is the survey's best level since September of 2007. And this lifted the margins, the major averages, to their session highs, and then began to tail off as the day went on. Let's take a look and see what it is we're looking at for next week as far as economic announcements. And looking at next week, we see that on Monday we're loaded before the market opens. We're looking at retail sales. We're looking at Empire State. Business inventories come in at 10 o'clock. So Monday's a day loaded with information on this second week in October. Then we're going to look at CPI before the market opens on Tuesday. And housing market index at 10 o'clock on Tuesday. Housing starts on Wednesday, and then we get to Thursday with our normal every single Thursday morning jobless claims on the week before. We'll see if all the states decide to report this week or not. Philly Fed survey coming in at 10 o'clock. Economic leading indicators for the entire month of September will be reported, and then finally we'll have existing home sales coming out on Friday, as we have a week loaded with all kinds of information. Not only that, next week earnings season enters full force as more than 230 companies are scheduled to report their third quarter results. And so we'll see what effect this will have in the market, as we've had our pullback prior to these announcements. These announcements will affect the overall market. Now looking at the SPX for the last week, we see that we are no longer in an uptrend. We've spent some time below that 30-day moving average. There's the 30-day moving average there. Spending time below it, actually the diagonal that I had drawn in and has been drawn in for quite some time ended up as the holding position for the market as we enter into this big week of earnings. And basically, if earnings have any kind of results whatsoever, we may see a bounce take place as we continue to trade in this zone. But notice that we've traded below the 30-day moving average, so we've changed our trend from an uptrend to a sideways trend. Once we start trading below the 30-day moving average, the trend changes and we're in a sideways trend. If we don't get the kind of news that we can expect this market to pull back to around 1405. So watch that first hour of the morning and see where it's going, giving you an indication of what the market's doing and what it's feeling. Currently, the market, we're at Sunday night. The futures are looking a bit flat as we look at the overall market. Now, let's go ahead and take a look at the week with a little more detail. Friday's session got off to a kind of a quiet start there, and the major averages held near their opening levels until we got the consumer sentiment. Then we got a bounce, and then it tailed off for the rest of the day, as the key indices promptly fell through the unchanged to the session lows, but notice did not close at the session lows, and our diagonal line acted as a good level of support. Watch Monday carefully, as we may see whether we go and continue on down. Remember, the most important price of the day is the closing price. So we settled for the day with a 0.3% loss, with the S&P down roughly $4.25. This was with the fact that J.P. Morgan beat estimates, beat revenues, looked great, and Wells Fargo, they looked great, but it just couldn't pull the market up, as we saw that the XLF, that is our, which we'll look at in a little while, our financial ETF, was down for the day, as we're looking a bit labor on the financials sector of the market. Bank of America, Morgan Stanley also pulled back radically, as Bank of America was down 2.4%, Morgan Stanley down 3.1%, and we'll see what happens, whether we're going to get our bounce. But remember, you never have sustained market rallies without the financial sector contributing to that. So the SPX pulled back a bit on Friday and for the week. Then we notice, look at, here we are sitting right there at that 50-day moving average with the Dow, as the Dow pulled back for the week also. But notice that on Friday it was up 246 for the day, up 0.02%, basically flat, if that's what you want to call it, with the 50-day moving average holding for the Dow. Next, let's take a look at the NASDAQ. See that we have dropped well below the 50-day moving average. No sign here of a higher high and a higher low on Friday, as we got a lower high, lower low, and we're in a down cycle in what is now a sideways trending market, and we'll see where the NASDAQ leads us as we go forward. Down 5.3% for the day, kind of an ugly day for the NASDAQ, and headed for that very, very strong 3,000 level. We'll see whether we end up down there. We will certainly hit that if the market continues to pull back. Looking at the Russell, we see that the Russell did break through the 50-day moving average, actually closed below the 50-day moving average at 823, down 6.69 for the day, down 0.81% for the day. So we see that it also is in a bit of what looks like a downtrend, as we're spending time above and below and breaking below that 50-day moving average. Well, remember, you get more action out of the Russell, as it tends to have a higher beta than the S&P and the Dow. Next, let's take a look at the overall week, looking at the different averages, looking at the Dow, NASDAQ, S&P. We see all negative numbers for the week as we look at the change, and we see that we are no longer in double figures for the Dow, up 9% for the year, NASDAQ up 16% for the year, S&P up 13% for the year, Russell up 11% for the year, with all of them down anywhere from 2 to 2.9% for the week, as we continued with that pullback. Of course, when the market pulls back, what do we expect the VIX to do? Let's see if it did it. We expect the VIX to go up a little bit. It did, but looking at a 6-month chart, you see that we are still in a very low level for the VIX, as we have this bit of a pullback. It's still well into the lower part of its normal range. Looking a little more carefully at a 3-month, we see that there's been a little bit of volatility here, as the market has been going through some gyrations between this 17 level and this 13 level. Very low levels for the VIX, and it has been represented by the amount of premium in our options. So let's take a look and see what some of the sectors in the market did last week. Looking at the bond market, we'll look at TLT, and we'll look at it was up for the day, up a little, and we see that we finally broke above that diagonal line that we have there. But look at that candlestick. Potential for that candlestick to be a reversal candlestick. Watch for a higher high or a lower low on Monday, as we see the bond market did finally break above that current downtrend that it was in. All right, next let's take a look at another sector. We'll take a look at the financials, which we said had what a bit of a miserable day, down 0.22 or down 1.37% as it led the market down, sitting still at that 30-day moving average, so still in an uptrend for the financials. And we'll see what happens and whether the financials will have earnings to keep the overall market heading up. Then let's take a look at oil and see what oil did. We'll look at the oil sector. Oh, we've got a wrong chart there. But oil pulled, actually we're going to not talk about oil since I don't have the chart up there. But gasoline prices soared to over $5 in Southern California as refinery issues can't keep up with the demand. So we're going to take a look at oil on when we look at our next chart on Friday. Next, taking a look at gold, we see that gold was up down minus 1% or minus 1 point or minus 0.74% as we pulled off those previous highs, still sitting at that 30-day moving average. We'll see if that acts as a bounce point for us, and we certainly have some support at 170. We'll see what happens with gold as it is a bit of a safe haven for us. And then finally, let's take a look and see what kind of volume we had on Friday, and we see that we were basically at about average volume as we pulled back to that 50-day moving average on the SPY, and we'll see that it was down 0.33%. So the spider followed the SPX as we expected, bounced below that current sideways trend we were in, but hit that 50-day moving average and closed right in on that yellow zone that you see marked on that chart. So that's kind of the market as it was during this last week. Let's take a look at our stocks to watch. For those of you that are gold members, for those of you that are not, would like to see more free videos, go to www.optionsuniversity.com/free gold. And so with that, this is the week that was, and we'll take a look at the week that is to come as we look at some of our favorite stocks. This is Butch Schorak, Options University Market Forecast, Monday, October 15th, 2012. Welcome back, gold members. Let's take a look at the week that's to come. As we see, we have been in a down cycle and changed from an uptrend that we were in going into the week to a sideways trend after spending time below this 30-day moving average. So our current trend long term is sideways. And where is it that we're going? Well, we knocked out, if we looked at where we were last week, we were basically the only resistance we had above us was at 1485, 1505. We went through all these levels of support rather rapidly, and if we continue on down, we certainly could go down to this 1400, actually around 1398 level without any problems. So we may see it go there, and that may be our new trading range. A lot of it will depend on what happens this week with earnings, as we see that the market definitely was a little bit anticipating the earnings, and we got a little bit of that October pullback. Not really trading that far below that sideways trend that we were in, but we did hit that diagonal on Friday. So watch very carefully on Monday whether we get a higher high and a higher low or a lower high, lower low, and that will give us an indication of where we might be traveling, either back up to some of our previous highs, like a range looking for that level at 1475, 1476 there, or we may get lower lows and lower highs and head for this 1398 area down here, which would give us maybe a new trading range. Time will tell, and earnings will have a big effect on us. Were the earnings pumped up, and what is going to be expectations for the fourth quarter as we look ahead, and that will definitely determine our trading range as we've been heading up for the entire summer, and October is when we have that pullback. Now remember, The fourth quarter is generally our strongest quarter in the market, so don't be surprised if we do head up, but earnings will have a bearing on this. So watch this carefully. Monday, Tuesday, and Wednesday of this week will have a huge effect on where we're going in the market as we see 230 of these companies providing us with the momentum to go one way or the other with lots of earnings coming out this week as we're well into the heat of earnings season. Now let's take a look at some of those stocks that we've been watching, and we see that Amazon has finally pulled back, actually pulled back below the 50-day moving average. The market continues on down. We could see it pulled back down to this 235 level before it gets its bounce. It will have an effect on what the overall market does, will affect Amazon, but this is the first weakness in Amazon that we've seen in quite some time. And earnings are coming up on October 25th, which certainly will have an effect on us, but we're not showing any great earnings run as we're only about 10 days away from that. Next, let's take a look at everybody's favorite, Apple. And we see that Apple has pulled off that $700 mark and actually came out of its trading range, and we'll see whether it gets its bounce here, trading below that 50-day moving average, and we could potentially go down to this previous level that act as support. And we have earnings coming out very shortly, like within about 8 days, as we look for Apple to come out on the 23rd in this earnings season. That will affect the market. That you can count on. AutoZone kind of bouncing all over the place, pulled back with the overall market, but still trading above the 200, above the 30, above the 50, and so AutoZone has been trying to rally back up to its previous highs. All right, let's take a look at CMG, going absolutely nowhere, and we do have earnings on October 18th, and that will affect where CMG goes. Used to trade up there well into the 400s. We see it's now had been very punished last quarter by earnings, and we'll see whether it's got a comeback for that. Something will have to change rapidly for this stock to change. Be careful of earnings. We're about let's see, this is the 15th. We're about 3 days away from earnings, and this stock may be too hot to handle until we get through the earnings release. After that, you may be able to take a position on CMG based upon what those earnings announcements are. They can completely change the complexion of a stock. Looking at Google, we've got 1018 is its earnings, and we see that it has had a heck of a nice run. Don't be a bit surprised to see any cooperation out of the market, trading above the 30, above the 50, and above the 200. If we have any move out of the market whatsoever, you can expect to run into earnings, one you may be able to take advantage of if you are a bull on Google. But be out of that before the 18th. Remember, this stock can make huge moves on earnings announcements. Next, let's take a look at our next company, Green Mountain Coffee, going nowhere. Going absolutely nowhere, and we've got earnings coming out on that around November 1st. All right, ISRG, not the stock that it used to be, trading in a very tight range. Earnings coming out on 10/16. Watch those earnings, as it'll have an effect as to where ISRG will go. One of the problems that it had was forecasting future earnings. We'll see whether it has the same problem again this quarter. Then next, let's take a look at our next stock, MasterCard. Earnings on 10/31. One of those companies very, very well favored because of QE3, and we see that it has our typical bullish pattern on it. 50 above the 200, 30 above the 50, and we see that it is running into earnings, which are still a couple weeks away. Time for this to have a bit of a run into earnings, and one you may take advantage of, as we got a buy on this, a buy signal on MasterCard on Thursday, with higher highs and higher lows, and looks like it wants to break up higher heading into earnings. Next, let's take a look at McDonald's and see how that restaurant chain is doing. Having difficulty, no longer that stock up around 102, kind of going sideways. Earnings on 10/19. You might stay away from this until after earnings to see what's going to happen to McDonald's. Next, let's take a look at Nike going nowhere. Earnings already come. Look at this one for whatever your favorite going nowhere strategy may be. Take advantage of some theta, looking at butterfly, or looking at potentially maybe an iron condor, but Nike just is not doing it. It hasn't been doing it and doesn't look like it's going to improve. Next, Priceline. Big pullback with the overall market, very much like Priceline. Watch for a buy signal. If we do get a buy signal, earnings on 11.5. Don't be surprised to see this one run into earnings. Wait for that buy signal, looking for higher highs, higher lows, and see if you can ride the bandwagon on Priceline. It will do it if the overall market starts heading back up. This thing has been known to run and will continue most likely to do that. So take advantage of Priceline. All right, W.W. Grainger running into earnings on 10/16. They're going to be this week, and we see that it's had a nice run. Look at that breakout on Thursday as we see it just take back everything that it gave away during the beginning of the week, and a bit of a lull there on Friday as the overall market pulled back a small amount, but earnings are this week, and see what they've got to say about W.W. Grainger. These earnings provide us certainly more risk in these positions, so whatever your rules are according to earning, make sure that you stick with those rules. All right, with that, that's our list of horsemen, the stocks that we like to watch in conjunction with the overall market. We've got some bullish stocks there, we've got some bearish stocks, and we've got some I'm not going anyplace stocks. Plenty of information there for you to make some really smart decisions on trading, looking at the overall market as one of the indicators you can use. And so with that thought, this is Butch Chorak, Options University. It's Monday, October 15th, 2012, and thank you so much for being here.